What is going on, guys? Welcome to my video. Today I would like to share a little story. So last year when I was finishing high school and had no idea as to what to do with my life, I took an economics class. I became fascinated with the way the economy works and how everything is interconnected. I became even more fascinated with the concept of investing. I always wanted to invest, but I didn't really know where to start or what to invest in. About a month later, after I was done with high school, I was at my restaurant job where I was waiting on this couple. They were super nice and easygoing, so we started chatting a little more. I found out that the gentleman was a financial advisor. I told him that I wanted to start investing my money and that I needed some help. He handed me his business card. On the same day, I set up an appointment to see him. Next week, I went to see him. This is what he said. Let's begin. Hi everyone, welcome to my video. My name is Paul Ocampo and today we'll be talking about how to start investing your money in the stock market. Just like you, before I started putting my money in the market, I was overwhelmed by all of the financial terms like price to earnings ratios, dividends, cash flows, and many more. Luckily, I didn't let this discourage me from investing my money. One day, I met a financial advisor at my job. I set up an appointment to see him, and this is what he said. He said, get Robinhood, look up S&P 500 ETF, buy and hold, and that's it. I'm done now. Just kidding. Let me explain. At the time, I was confused. I was expecting him to tell me to invest in companies such as Google, Amazon, Microsoft, but instead he told me to invest in an ETF. I didn't even know what an ETF was, but now I do. An ETF is an exchange-traded fund where fund providers such as Vanguard or Fidelity buy many different assets such as stocks, bonds, or any other commodities, and they create a basket. Then they sell shares of those funds to you and I, the investors. ETFs usually track different industry or specific indexes such as the S&P 500. The S&P 500 measures the stock performance of the 500 largest companies in the US. After learning more about investing, I can see why he advised me to get an ETF. He wanted me to follow one of the most basic concepts in investing, and that is diversifying. Every investment involves some sort of risk, and by investing in an ETF, you are reducing your risk of losing money by a lot because your money is being invested in many different companies. You can expect an average of 7 to 9% return annually, and buying an ETF is perfect for beginners because all you have to do is to buy and hold. That's it. You don't have to spend countless hours reading about companies, business models, their financial statements, and many other things that professional investors look at. All you do is buy and hold. There are many studies that show that holding a stock for a longer period of time is going to be more profitable and safer for you. Sure, you can make money trading stocks daily, but the risk is way higher, and since you're just getting started investing, I would not recommend doing this. To start investing, you will need a broker. A broker is basically a company or a person who is legally allowed to arrange transactions between sellers and buyers. Luckily for us, all brokers are moving towards commission-free trading. There are many brokerages like Charles Schwab, Fidelity, Webull, and the easiest for beginners, Robinhood. Let me show you how it's done. After you've downloaded the app, you will open Robinhood, which is the app I'm gonna be using for this video. So you're gonna open it up, and then it's gonna look something like this. and then you're gonna go to the search tool and type VOO, which is the ticker symbol for Vanguard S&P 500 ETF. So now you're gonna go there and you're gonna see the price at which is trading right now, which is $282.29. I know you're just getting started and investing this kind of money might be intimidating. The good thing about Robinhood is that it allows you to buy whole or fractional shares. What this means is that Robinhood will allow you to buy a share based on the amount of money you want to invest in that particular stock. So for example, if you want to invest $60 in this ETF, you would own about 1/5 of a share. And yes, you can invest $60. That is less than a pair of Nikes. So yeah, you can do it. Today, I will just purchase one share of this ETF. So you go to buy and then you select order types and then buy in shares. Then you will put one share and then click the green button, then swipe up just like Tinder, and there you have it. You have now invested in your first stock. Now, I would like to make something clear. First, I'm not a licensed professional, so before you do any investments, please do your homework and research about what you are about to invest in. Second, you only make money when you sell. I know it's nice to wake up the next day and see that your stock is worth more than what you paid for, but you only make money when you pull your money out of the market, meaning when you sell. We're in this for the long term, so you will only get to see your gains once you sell your stock, which is many years later. Another thing I would like to mention is that you don't have to panic. The stock market is a very emotional driven place, and since we're here for the long term, we don't care if our stock is worth 5% less the next day, because we know over time we're gonna make that money back and we're gonna make a nice profit. I get it. I know maybe you don't feel ready to start investing your money. We all work super hard to get our money, and losing it is very scary. But just keep this in mind. Your money will lose about 2 to 3% annually thanks to inflation. This just means that your money will lose value over time and you will have to spend more money buying the things that you already buy. If you ask me, that's scarier than investing. When you invest, you're making your hard-earned money work for you. You will enjoy the rewards of making these investments in the future if you're consistent and focus on delayed gratification. I can't believe it's been already a year since I started investing. Even though I don't have a large portfolio yet, I'm happy that I took that first step and that I'm now investing in a more consistent basis. It's all about taking that initial step, staying consistent, and keep learning new information every day. When I started, I committed myself to purchase an ETF every 2 weeks when I got paid. If you're serious about starting to invest, you can get 3 free stocks today. 1, when you sign up for Robinhood, and 2, when you sign up for Webull and deposit $100. How cool is that? Getting free stocks by just signing up. I will leave my links down in the description. If you found value in this video, please give me a thumbs up and consider subscribing for more videos. Let me know if you guys have any questions or which topics you would like me to cover in the future videos. Thank you so much for watching. I love you all, and I will see you guys next week.